This is the class. Been kind of use this board a couple of different ways. These are the questions. There's my contact. Now, resources. This may be a little small, but it's not too big of a run. Color ink. INK
has free resources. Okay, so if I reference any resource, you can always look on colorinc.com. So chart of accounts on colorinc.com. So if you don't know how to do what we call a P&L statement or profit and loss statement, this is where we're going to go and get it. Okay. If you go there, because they always update it, and it's not there, I didn't lie to you. They just updated it. Just email me or text me and I will send it to you. Because it's in one of the 1 million files I have. So, but they are updating it pretty actively right now. That's the only reason I say that. There's a ton of resources on Keller Inc. for you as well. I'm going to talk about paying yourself a salary. How many of you guys do that? Good. A couple of you, that's good. And we want you to pay it something of a salary. And we want to talk about preparing for future, sound future. Unsound financial problems inhibit opportunities and growth. They reduce the effectiveness. They sap your time to create unneeded stress, and they can be expensive. So has anybody been in a position at the time taxes are due that perhaps you might have taken your commission and felt set aside enough money for? First year in business, I did. And I thought I was being pretty good. Yeah. What do you think you should be putting away for taxes?
Third.
At least a third. At least a third. I would say 30 to 40% should be put away from your commission checks. How many of you know what your profit margin should look like? Does anybody know how much money out of every dollar you should be making in terms of profit?
30%.
40 cents out of every dollar is what you should be. Here's a fun fact. How much profit do you think each market center makes per dollar? How much profit do you think?
Hopefully 40.
3 to 4 cents. You make 40, they make 3 to 4 cents. I tell you that because I find it incredible in the market right now that people are jumping brokerages all over the place. Because I'm like, I think Keller Williams is pretty smart in the way they run their business. They know their numbers. We're only making 3 or 4 cents off of every dollar that we make. What more can we do? Right? I mean, they gotta provide profit. So just giving perspective is you have to run a really tight ship. So a lot of the financial practices that we follow
So
as individual agents,
It's 97% expenses.
they keep a profit of 3 to 4%. Yep. And remember your profit share is part of that too, because they're paying that much out.
How value the financial?
Tough. It's very lean. It's very, very lean. I mean, it really is. That's why we ask for so many contributions from sponsors and donations and participation. Yeah. 34% is what is kept as a profit for the month. Yeah. And that's all market centers. All market centers. So we're looking to be worry and stress free, allowing you to take advantage of opportunities, freeing you up to do more, making money work for you, and prepare for your challenging times. So I owned a business back in 2006. It was a construction business. We were booming like crazy. We were an electrical contractor, commercial and light industrial in Atlanta, a booming market. And I had owned it for at that point about 10 years and had almost 42 employees. And how I got into construction is a long story. We'll talk about over wine sometime because I know you may or may not see me as a construction worker. I was. And 2006, we thought everything was going great. My husband at the time and I put a contract to build a house, $1.2 million on a golf course. And it took about a year to finish. And by the end of 2007, we were in the financial crisis that we all have heard about. We moved in knowing that we probably should never have closed and somehow pulled out and lost all the money we put down, but we didn't. And we lived in that house for about a year. I took no paycheck the last 6 months because I didn't want to lay off my employees. I short sold my house because I didn't want to lay off my employees. I pulled all 3 of my children out of private school that they had been in their entire lives and they were in high school and moved them to a public school that was 4,000 students. And I got divorced. My life was turned upside down. And from that, I never want any of that. So,
Something like 2004.
yeah. So I tell it, and every time I'll get teary, every time, it never gets easier. It's 2023. I'm remarried happily, have a husband who has a solid job. I own multiple businesses. I'm still scared to death and traumatized financially. And I always will. That's what I've learned to deal with. So, but what I want you to know is I want you to know not to make things sense. They say the market's not collapsing. They say we shouldn't be scared. We need to be aware. There are similar signs in the market to what happened in 2000. There are huge differences, right? But there are huge differences. Do I think it's going to collapse? No. Do I think it's going to get hard and harder than it already has? Yes. That's why I teach this class. So this is financially unsound, what we see a lot of agents doing. This is your gross commission, GCI. Okay. 57.60 because your brokerage has taken out their percent, which is about 36% total usually for most people. You have your personal bank account. We go and we spend what's in our personal bank account and we fail to save business taxes. I'm thinking here is doing that. And here we go with what we want to have done. So GCI, your check, you got a business account, you're putting 30% into. Why are we putting 30% into that? You know, what are we,
Taxes.
Just
for taxes.
No,
Operate-
the taxes
operating
are over
costs.
here. This is just for future operating, right, just future operating costs. This your tax savings account? MREA says 40% in your tax savings account. Why did they say 40 over 30?
So you'll have enough.
Right, so you'll have enough. I mean, it's going in the savings account, it's there, you'd rather have extra. And then 60%, you've got that going down into your wallet. And putting that in there. So one transaction at $9,000 commission, $5,760 net payment, $2,419 in expenses paid and taxes. So your numbers tell a story. Here's the numbers that I want you to know how to track. This is what we're going to know how to do. GCI, volume, units, and closed deals, net income, which is the same as profit, how much money you have in the bank, multi-year trends report, and lore. How many of you have heard of these 2 reports? Yeah. These are both available to you in MyKW. Okay. They're really, really, really helpful. And if you haven't seen them, I recommend go look in them in MyKW under your reports. Does everybody know what I mean by MyKW? MyKW.kw.com. Because I know now we go in, a lot of people, new agents are going in through commands. I just want to make sure I'm referencing that right. These 2 reports, if you have not gone through them, set up a time with your team leader to go through them. You'll be amazed. There are so many things in your business that you can learn from multi-year trends reports. If I look at your multi-year trends for the past couple of years, I can kind of foresee what's going to happen in your business in the next year. I can see where the dip is. Look and see where your dips happen every year. Why do you need to know that? What difference does it make? It changes the activity 60 days before there. If you know that every year in September you slow down, do you change your behavior in June and July? Do you send extra newsletters out? Do you make extra phone calls? Because what you do today doesn't happen today. And if you go through that with your team leader, you have a built-in coach in the office. Ask him to calendar it and remind you. Because I don't know about you, but I need help with accountability. And so I need somebody else to be like, hey, I just noticed you're on my calendar. How's that going? Did you do what we talked about? Even if they don't remember, I want them to remind me and refresh it. Language of real estate. Anybody have questions on these? How often are we tracking these? Okay. I would ask you to track them every month in a spreadsheet. And I think most people are doing quarterly. When people ask me how often you do all the reporting, do it monthly.
You do the first 3 every week.
Yep, that's great.
Net income, money in the bank, monthly.
Good.
So you know,
There's something for here for every level of business, right? And you're a good example of that. How many deals are you doing a year?
last year, I think we did 70.
So 70 deals a year. You're gonna look at these a lot more frequently, right? I mean, you know, because you're churning and burning deals every month. Newer agents are happy to have a deal a month, right? And so you don't want to deal a month?
We did 45 last year.
That's great. That's great. As a new agent, what do you think most agents say they want when they come in as far as income for the first year? What's your hope and your dream for making?
I think everybody said 100,000.
Everybody says $100,000. As a team leader, you walk them around and they're brand new agents. Everybody says 100, and I said $100,000. So there's no shame in that game. When I walked in as a brand new agent, that's exactly what I said. And then I took the class and I was like, no, everybody says $100,000. We probably need to up that at this point, but still they say $100,000. And everybody says, I just want to do 12 to 20 deals a year. Right? We got to know if 12 to 20 deals gets us the financial that we actually want. So as you get busier, you will do these more frequently. So doing those on a weekly basis, that's fantastic. So who has a profit goal? You don't tell me what it is in terms of numbers. But who has a profit goal? Do you know how much you want to make this year? You should. You certainly should. You don't know how much you need to make?
Well, no,
You don't know, you
I
don't know
mean,
how much you need to pay your bill?
we know that. I know, yes, I know
Yeah.
what the nut is, but we haven't really gone with that. Which we should, one of the reasons I do
Well, we need to. So I would like for everybody to think about what that goal needs to be for the next 12 months and write that down. Write it down on your piece of paper, what you need to make. If you haven't already done it. And the reason is because when you write it down, it holds you accountable to it as well. There's a process in your brain that will literally change when you write something down. So write it down. You're not doing it for me. I'm not coming to check your paper. Do it for you because throughout the year, you're going to remember that you wrote it down. Does anybody have any ideas on what they want to do? Any big goals on what they want to buy or spend or hope for with their real estate income? Is everybody just hoping just to get by? Oh, God, thank you. A condo in Gulf Shores. That's amazing.
We're meeting with contractors to build a sunroom and remodel the house.
That's fantastic.
And build a detached garage.
That's amazing. These are great things. These are good goals. And what do they do for your family and your life and your memories and the joy you get out of it? Yeah. So we have to know we're making enough
it.
money.
Good team, right?
I have a referral team. I've kind of disbanded my team in Georgia. I have a straight up referral team in Georgia.
So on a team, do you let each individual agent set their own income and profit goals? Or do you set it as a team and then divide it among everyone? How do you?
I did it as a team and then divided it, but not equally. So then we meet and we divide it amongst the history, the experience, and their personal goals. But every team is different in that way. You know, some teams won't hire part-time agents. So then they would split it more equally, right? But if you're the team that's like, I'm here to help anybody just to get where they want to go and what their dreams are, then that has to be kind of more an individual approach. So, yeah, and you have to make sure that it's worth it for you too, right? At the end of the day, the team is putting out a lot of money and a lot of effort and overhead for their team members. That 40% too is not what teams make either. So that 40 cents on the dollar is different for every team. So I would like for each of you to think about at least one thing that you would like to do with your profit and write it down. These are some ideas. Do you want to fund your life, grow your business, invest in your future, build a legacy? What does that mean? Do you want to have financial freedom? What does that mean? Do you want to pay for vacations each year? Where, like, how much does that cost? What do you want to give your children, pay for your kids' college? Not everybody works for the same reason. Some people are here as a second income and some people are here as a primary income. It's your dream and what you want, and I want you to write it down because that's what you would. So we have a financial fitness assessment in your student manual. If you guys will turn to it, you will see it. Let me pull it up and show it to you. So your financial fitness assessment is a yes, no, sometimes series of questions. So let's just go through it together. Do you have a stated profit goal for the year? Everybody should answer yes, because I just made you write that down. Do you use a written budget for your business? Doesn't mean that it doesn't change throughout the year. But do you use one? Do you use a profit and loss statement and review it monthly? Do you have a separate business and personal checking account and credit cards? This is probably one of the biggest mistakes that I see people make. They do not have that. You should have separate business and personal checking account and credit cards. You get audited, you're going to be glad. Do you contribute to a tax savings account regularly? Do you pay or know if you should pay estimated taxes? If you had a tax bill last year, you probably should be paying that you had to write a check. Okay, you probably should be paying estimated taxes. And you're paying a penalty in your new taxes. So you're wasting your money. So if you don't know, let's find out. Okay, but you need to probably be paying estimated. They're super easy to pay. We need to get you straight on that. Do you have a tax advisor or a CPA? Anybody in here have a great tax advisor or CPA that's local? Okay, look, like, I'll raise your hands high. If you don't have one, look at these people. Ask them who theirs is. Because finding somebody who's great and in real estate or in single entrepreneur business is hard to find. Use somebody in this office to give you a resource. It's really hard to find. So this is, yeah, make sure you ask them for their name. Are you tracking your business miles? Does everybody understand? And I'm gonna just, let me straight up tell you, I'll jump through these slides in random order. We're not gonna go through them. That's why you'll see me jump through them. If I think of something that I need you to know before you have to go, I'm gonna go ahead and tell you because I don't want you to leave and miss it. How many of you are tracking your miles? Right? What are you tracking? Are you tracking where you start, where you get, where you end? Yeah. Are you tracking your odometer mileage or just the number of miles you did?
Just my track.
Yeah, listen to how many different answers there are. You should know the beginning odometer at the beginning of the year and the miles done.
And who I was with and where we went.
Thank you. Yes, who you were with and what the purpose of business was. You really do. If you get audited, you really do. No, that will not fly in an audit. And so what will happen is, yeah.
Well, there are apps for that and I
Right.
don't use the apps.
Yeah, I like you.
I don't like the apps, but so I started just at the end of the day, when I pull up in the driveway, I just stick it in my calendar and I just put it in there and it takes about 10 seconds.
You've gotten in a good habit.
It has to be a habit.
Yeah.
I have trouble. And you have to be as organized too.
Right.
Yeah. I guess that's what works. I do.
I use some.
That's perfect. It's a notepad to keep your miles on. That's perfectly fine. Yeah,
What's the beginning, ending, what day, where you're
that's perfect.
at. I
Yeah,
just keep it in the side door pocket of the truck.
So what'll happen, you get audited, they're gonna can't throw out all those miles if you don't have a business purpose statement on there. Now, you can fight it and go back to your calendar and add the business purpose.
keep up.
But it's a lot of work. Yeah, it's just a lot of work. So we're just gonna try to save you some work. If you get 1% better through this class, I'm happy. We'll get 1% better at every class. I don't expect you to take everything, but that's a really big one for agents. And it's one of the biggest flags for an audit right now, is your mileage. So just know that that's one that's gonna probably pop up and bite you if you don't do it. Keep your receipts for your business, and again, what you used it for. So what's the business purpose? If you go get something to eat, who did you eat with and what did you discuss? A general, it can be a general. We discussed the listening appointment. You can try that one. But you have to have the business purpose, yes.
So as far as keeping receipts, it does my credit card statement?
No. I sure do wish it did. It does not.
My credit card statement.
No, it's not.
It's not a receipt.
Just keep your receipt right on the back of it.
Is it true for a restaurant receipt that, so you get two, there's one
Yep.
that tells
You need the
what
itemized
meals,
one.
yeah, you need the itemized
Itemized one.
Yeah, that's what I'm.
Not the summary, where that gives the tip information, the itemized
Yeah.
one. Yeah, yep, that's right. And if you don't put a meeting purpose, if you're not in a meeting, it is not tax deductible 100%. Then it becomes entertainment. That's why you're writing the purpose down. So it's 100% deductible. So put your purpose down.
So one thing we found to simplify the receipts, this might help Carrie too. Say we're at the restaurant, where we take a photo
Yep.
of the receipt, and then we email it to a separate Gmail
Yep.
account that we have that's just for receipts.
Oh, that's neat.
And
Yeah.
then what
That's
I
a good
did
idea.
was I went into that Gmail account, and I categorized using labels, January
Mhm.
2023, February
That's right.
2023. Then we put the same subject all the time. It's always the amount, the vendor.
That's a fantastic idea. You can also, if you use American Express, you can take your American Express statement and you can tie the receipts to that and upload them if you want through their app somehow. I haven't used it, but I think it's pretty simple. You can use Expensify, which is kind of like MyLIQ. Take a picture of the receipt, you categorize it, it prints out your expense reports at the end of the month or at the end of the year. So it's a couple bucks a month, whatever you can use. That's great. There's other apps out there. As long as you get it tracked somehow, I don't really care. You can stick your, here's the way I do it. Now, first of all, I'm no accountant, so I've just been doing this for a lot of years. I write on the back the name and the purpose, and I stick them all in a huge gallon-sized bag at the end of the month. I don't sort them, I don't do anything else, and then I just go on my credit card statement, because it's all
If you
business.
don't get audited, you won't ever look at them.
Right. If I get audited and they want my receipts, they're gonna get a big old baggie full of stuff that's gonna have, 12 months worth of receipts. That's what they're getting. So I'm not like the, organizational genius. I'm not saying go and make your life hell. Okay, but do the basics, write your name and that on the back. If you can do it this way and that works for you, that's fantastic, because it's gonna make your life so much easier if you get audited. Again, if you're running 70-something transactions, your numbers are bigger. And you probably need to worry about it a lot.
Have multiple, spend your money too. So it's-
That's a lot different. Yeah. When business gets bigger, the worry gets bigger, right? And so we have to think about that a little bit more. Do you pay yourself a regular salary? Yes or no? Most accountants will tell you you need to pay yourself a regular salary, even if it's $100 a month. The deduction is different. The clauses in whether you're an LLC, an S Corp or C Corp are different. Whatever you filed with the state doesn't matter if you don't follow the rules. Hear me again. If you filed an LLC and you don't do the rules of an LLC and you get sued, you are not an LLC. They will come after everything you have personally. So follow the rules of the LLC and get yourself up to date. So you're going to have an annual meeting with your stockholders, even if it's just you. And you're going to take some notes. Here's what I discussed with myself today. And you're going to stick it in a folder. And you're going to do it. I mean, even if you have other people and they don't show up, record that they didn't show up. So I have business investors that don't care. They're not coming to my annual meeting. They don't care. But I still schedule it so I can show that I scheduled it. And who was not present? Everybody else but me. So I have a meeting, I take notes on the topic and I send them the notes and they're good with that. But you have to have it.
My CPA mentioned that with S corps now, There's actually more regulation on how much you pay yourself.
There is.
If you do $100, it's not gonna cut it. It has to be a livable wage for that career you're in.
So it all depends on, and so talk to your tax advisor, again, it all depends on how much money you're making.
Right.
Right? A livable wage, what is a livable wage? Well, if I'm only making $1,000 a month in commission because I'm a brand new agent, $100 is acceptable. If you're making, if you're making serious money, you're making $60,000 or more in terms of profit, you need to be paying yourself a reasonable salary for that profit. And we're gonna look at it in Maria at Keller Inc. And some of the reports I'm gonna send to you are gonna tell you what actual percentages you should be paying yourself. Okay, so you're gonna know that too. But it is important to just know to do it on a regular basis. You don't just go, oh, I had a commission, let me write myself a check. I'm gonna put that in the bank, and then at the end of the month, I'm gonna write myself a check every month from it. So we're using the chart of accounts, yes or no? Know how your margins compare. That's your profit margins. Know the average cost of each of your transactions. Do you guys know what that is? Do you know? No. Right?
Do you have an idea of how to track that? Because I've been trying to track that. And it's really difficult because you have some fixed expenses. You
Yeah.
Spread those across each transaction. Or do you only track the specific expenses per se? If you have a listing, obviously you might have drone photos or whatever. But like, what about you're on the buyer side,
Yeah, your operating costs, your non-variable operating costs should be split across. And
Should.
then the individual cost that's linked, and we'll go through this, that's linked to each transaction goes to that transaction. But you're looking at the average. I mean, we're gonna run an average, right? Like, how much do photos cost? How much does, what the staging cost? How much did you pay for that? Like, do that. And then, yes, there are gonna be, so if you have a luxury listing, you're gonna do drones. If you have a luxury listing, you might do some other things. If you have maybe a rental, you're not gonna do as much. You're gonna figure those into the individual costs, and then you spread it out. So all of those other fixed costs, you spread those out. Yeah, that's how I would do it. That's how I've always been. So, how many of you have an active profit share tree? Come on. Well, that's free money. Do you have a financial plan for retirement? Please tell me you do. You need to. If you don't, please start one today. And have gotten rid of your debt. All right, so is there anything in there that you guys are like, I probably need to start thinking about that?
My accountant's against me doing it as sport. So
That's not surprising to me. Most people in
She
this business are
refuses
gonna
to
be
go that
LLC. Most people in this business are gonna be LLC. There are just different tax advantages to each
and I
one.
know there's a lot, like I wanted to say yes, but she said you have to see difference and she will not.
Yeah, I mean, there's a lot of different,
She said because since we're independent agents, paying ourselves a salary as a single independent agent, it's not, he won't sign off on it.
interesting.
Mhm.
That's it.
I
Yeah.
was like, it's my family that works there. It's like-
Maybe you have a consultation with somebody. And then you should.
Well, it's like when a person wants to use a realtor as their family, what do we do?
It's a
Just
weird
need to
Yeah.
do better.
I mean, there's different advantages from tax perspective and different ways of looking at it, in terms of your risk, for each of those. So I don't really care which one you use, to be honest with you. I've done both. I've been every one of those in my businesses. So, some because we have inventory, some because we don't have inventory, some because I have partners. So there's not a wrong way. If your accountant's telling you how to do it, they're not wrong.
I'm not probably saving as much money as the rest of everybody.
I mean, you might be saving it on your accounting bill because it's family. I don't know.
It's way cheaper than yours, Barry, I know.
Yeah, yeah. So, I mean, it kind of depends on how much you're spending and how much business you have coming in, how worried you need to be. But I wouldn't be super worried about whether you are an LLC, an S Corp, or a C Corp. I think a lot of people go to LLC because it's so easy to do.
Yeah.
It doesn't matter. I can tell you the differences.
But
at the
an
end of the day,
LLC can be a sole proprietor, it can
It
be
can
an
be.
S corp, it
Yeah,
can be a
it can
secretary.
be.
it can be all of them.
We're
Yeah. make him yell at us.
There's no real tax advantages. to the LLC,
No, it's more about your risk mitigation. Yeah, it's more about your risk
I
mitigation.
don't know about that. Did my pre-state taxes, but I've been paying for LLC last year.
Uh-huh.
And it's $10,000.
Yeah, I didn't.
And
do it
made
the year
more
my-
last year. The year
Yeah.
before.
Yeah, I didn't do it the year my CPA
yeah.
wanted me to do it, and
Corporation.
I did it the next year, and I saw the difference there.
So you're-
But my-
Yes.
Yeah, but my.
Saying
Yeah,
if you're just an
election.
LLC and you're.
Yes.
No tax advantages.
Yeah, I am now in S, which is.
I think it's a self-employment tax is a big advantage to the LLC over not having.
Yeah.
It's a self-employment tax.
But my attorney said, hey, the liability, you're licensed under you, so it may, I don't really know that it's gonna help you a whole
Yeah,
lot if
'cause see,
somebody were to
that's
see,
the- Same thing.
because
our
you are
attorney
your
said.
license.
Yeah, our attorney said that LLC
Yeah,
is
it's
not
not your
gonna protect
LLC.
you, your own
Yeah.
negligence.
Yeah.
No, that is why we have errors and omissions. That's right. And also you have to think about what is the likely liability that you're going to incur if you do something.
Well, possibly like, last year, my wife was in a car accident.
Mhm.
She had a person with her.
Mm-hmm.
It was a business thing. They were going to stage a house. And this lady got hurt.
Yep.
And we have an LLC and the car is in the name of the LLC. There was a little level of protection there.
Yeah.
Even though the lady didn't come after us.
That's why you have insurance.
Your insurance.
These are the reasons you have insurance too. I mean, and that covers
But if
the
you're-
majority.
You're
of it.
showing somebody a house, they fall down the stairs, it's good to have that level of
It
protection.
is good to have the protection, for sure, and that's why you want, that is what you want to have it for, but odds of having a major catastrophe that they're gonna go after the LLC versus going after your insurance, that's very low. And so you have to kind of weigh that out too, and that's what your accountant will do. So depending on how much you make, and guys, like I said, it's one about how much you make, two about how much your household makes. So there's, that's not a simple formula. So if you have a professional looking at it, there's really not a wrong way. I've done them all. Sometimes you do save money. Sometimes it's about how much money you spent, where you spent it, and all of that. Get some advice on that. Just please don't go through like LegalZoom or something and file it. Okay, don't do that. It's worth the $500, $600, $700 to have somebody do it correctly. Let's talk about, this is the economic model. So we talked about this a little bit. Your gross commission should be 100%, cost of sales 30%, operating expenses 30%. We're gonna be left with a net profit of 40%. So who wants to talk about what that means? Who knows what cost of sales?
Those are the, not fixed expenses, but those are the food expenses that go, more sales you do, the higher those expenses are.
So cost of sales is anything you directly tie to the cost of the sale, right? So typically though, and I'm gonna fast forward this because I think you guys all know that you make money and you pay money and then you make profit, right? Anybody not know that? Because I'll go through the formula if you need me to. I'm pretty sure y'all know. Okay, so let's jump to cost of sales. The cost of sales and operating expenses. So cost of sales is the cost of making the sale. So it's really simple. We overcomplicate it. We think it's photography. We think it's all of these things. It can be put there. I don't really care where you put it. But truthfully, this is the cleanest version of cost of sales that you can define. So as you break them out on your P&L statement, anything that's not listed right here goes to operating expenses. Okay, commissions paid to your office, your royalty fees, any referral fees you're paying out, that's all your cost of sales. Does that make sense? Yeah, pretty straightforward. Let's look at this from your capping models. Okay, so you haven't capped yet. This is the model, the numbers here. Everybody's caps are different throughout different offices. Do you guys know that Keller Williams caps are different throughout different offices? Do you understand why? I want you to understand why. Because if you go to a Keller Williams family reunion and somebody else tells you their cap's $47,000, you're gonna be like, holy crap. Okay, well, because their rent in New York is much higher, right? So they have to raise the caps and stuff to cover the market there. Because remember, we still only make Even in New York, they make 3 to 4% per dollar they earn. So as their expenses go up, caps and things like that get passed.
That literally happened to me at Mega Camp when I went last
Yeah.
year. I capped while I was at Mega Camp
Mhm.
and somebody overheard a conversation with it. They're like, you sold 10 million? And I was like, what?
Yeah.
Yeah.
It
happens.
It happens. This is a real conversation. It can go the other way too, because believe me, when those people from New York come and hear what you guys are paying in a cap here, they go back and they like yell at their team leader about how much they're paying. So if you go up there and you hear that somebody else is not paying the same amount, I want you to know why they're not paying the same amount. But also that also goes with like what's your average price point in that area, right? Like it all equalizes out at the end of the day. It all equalizes out. So their numbers, $9,000, you're paying your 30%, your 6%, because you know you pay 6% in your royalty. Then you've got your 30% for your operating expenses, 57.60, what you should be left with. Now, when you capped, here's the difference. You capped on royalty, but not on company dollar, because you can do that at different time periods. Most of you probably do it at the same time. Is there anybody in here who caps on them at different dates? A little bit different. Yeah,
Slightly.
yeah. So some people can be on a different date schedule. And then if you cap on both, you keep all 9,000. I think you guys know that model, but again. Okay, so operating expenses. This is everything else that is a cost of running your business. Your rent, your auto, your salaries, your insurance, your professional services, your marketing, advertising, equipment, sales, and supplies and education. Questions on that? Salary? Here. So, you guys know how much you want to make, right? Pull out your phones and your calculators. Phones and calculators, have some scratch paper. And let's do this activity. We wrote down a net profit goal, so I want that to go at the top. Whatever it is. I'm gonna work off the $250,000. You can work off of whatever you want to work off of. And the math is here. $250,000 divided by 60%. Divide that by 40%. And I'm gonna walk back through these a couple of times. That's gonna give you your gross commission income. I'm gonna wait there until everybody gets there. This next one's where it gets a little tricky. Everybody got that number? Does it look right? 250,000 divided by 60% is 416,000, dividing that by 40%. Gonna give me 1,041,000. So really stopping here, I can see the difference. If I want to make $250,000 in this market center, I have to sell it. I have to make a gross commission income of at least $1 million. That's my gross. Now, dividing my gross commission income by your average commission. Do you know what your average commission is? And what is your average home sale price here?
211,
211.
200,000 easier number.
Yep. So average commission, we're gonna round up. It's really around 2.8% right now for most people, say 3%. If you're giving away 1%, you're giving away a lot of money. So figure that in, what is your average commission gonna be? Does anybody have questions on this? Does everybody know what their average commission is? We're gonna start hollering yes. Yes, okay. The gross commission income divided by your average commission. And then your anticipated cost of sale. Keep going. Do you know what this number needs to be? Everybody stumped on what anticipated cost of sale, because nobody's asking, so I'm assuming you know. I think you know, but I think you're thinking, do I really know?
I just assume that's what you anticipate at the beginning of the year, the cost of sales to be.
So it's gonna be 30%.
Yeah.
So your gross commission income by 30%. Remember, your anticipated cost of sale is 30%
Where did you-
of whatever.
where did that number?
So remember, we're at 30% cost of sales, 30%, it totally just left me. Let me go back.
Operating expenses?
Yes, thank you. Operating expenses, 40% profit.
Oh,
So that's what your money breaks down to. So what is your 30% of the gross commission?
gotcha.
So what is your gross commission? This number times 30% is your anticipated cost of sale. Multiply your gross commission income by 30%, and that is going to be your operating expense budget.
So the same numbers.
These are your budgets. Yeah, it's gonna be the same. Yep, same thing. So multiply these. Now, the difference here is that they're giving you a breakout for if you're on a team, if you're a solo and you have a royalty plus cap dollar amount. This gets really complicated. I'm telling you to stick with 30%, you're really safe. These are your numbers you're gonna work with for planning,
So.
based
on
off of
that
your
cost-
income goal.
The cost of sale,
Mhm.
you, that, 2 slides back, you said it was royalties, commissions paid out.
Yep.
So, I mean, I know those aren't fixed because they change. They're almost kind of fixed.
They're pretty close to fixed. I mean, they're pretty close to fixed. So, I mean, we went way back.
2 slides back.
Was it only two when I went? Was it only two when I went too many? Yeah. Might have been. But you're right, so I'll go back through it. Yes, it can almost be fixed, right? Can you move it up or down? Yeah, you can move it up or down. You stop giving away 1% to get the listing, you start selling in a luxury market. Like it can fluctuate, but for somebody who's a seasoned in business as you are at this point, you kind of know. Kind of know.
We're tracking more than that, more than those things on cost of sale.
We will, that's fine. I mean, you're probably tracking, we're recommending you put them under operating expenses, you're putting them under cost of sale. Either way, both of them are 30%, right? But you have to know that because if you were to bring me your financials and we're gonna look for clues as to move forward, we need to know that yours is gonna be out of balance from what I would recommend. At the end of the day, as long as the 2 equals 60. Good. Yeah. Does that make sense to everybody? If not, stop and let's go through it.
Okay, hang on, right there.
Yep.
The solo, okay. Oh,
Yeah.
Oh, plus your company cap, okay, all right. And then. So your bottom line,
So if you're an individual agent, I want you to use this formula. What is your royalty plus your cap? If you are a team, I want you to use this formula, 30%. Okay, because you're gonna cap here for your process. So what are we doing this for?
Where did you get the 139 for home sales?
We took your gross commission income right here and divided it. Divide your gross commission income by your average commission income. So what is the average of that you get per sale? 6,000-ish. Take your GCI and divide it by that. And that's how many home sales we're going to anticipate. Right? And so we're using these numbers to build your budget. These are your basic budget numbers. So if you have no budget, you have a budget now. You just wrote it down.
okay, so your bottom line, okay,
Mhm.
let's go those last two,
Yep.
two things there.
Mhm.
Anticipated cost of sale, so your team is 312,500, solo 23,000, and then you're operating. Give me the math here, because your bottom line is the same as up there, so.
Tell me what you mean.
The team.
The-
We're starting bottom line. So you are starting bottom line and working backwards. So
Okay,
here's what I find. People have brains that work one way. I could flip this and it would probably make perfect sense to you. So this is your budget and these are your expenses.
I'm just
Now
trying
we're
to
showing your
subtract off
expenses
the
minus-
royalty and all, and,
This is for an individual agent.
okay.
So an individual agent would use 23,000.
Instead of
team-
300.
Team member would use 30%, because that's what they're gonna
Oh,
fund their
okay.
team with,
Okay.
right?
But the team one is carried
Okay.
down to the bottom. for some reason.
Yeah.
Individual agent one is not. That's-
No,
That's where.
this is not,
getting
these
my
are
bottom
completely
line.
separate numbers.
Okay.
So I see what you're saying, because they look the same,
Mhm.
but they just hope it both happen to say 30%. Just
Okay.
ignore that. This
Okay.
number is a variable number.
Okay.
Okay, because they're assuming a team with this, with the gross commission income of this. If your gross commission income changes here, this number is gonna change too. So will this, because they're always gonna be 30%, 30%, 30%, 30%, right? So they're both gonna equal 30%. That's why they reflect. It's not carried down. They're both just cost of sales 30%, operating expenses 30% of
Okay.
whatever this number is going to be.
Okay.
Okay? So what we need to know is, what do you want to make? What do you want to make? Not what did you make? What do you want to make? Okay, then this tells you what you have to, what your gross profit has to be, which means you have to have a gross commission income of this, which means you need to sell this many houses for it to make what you want to make. That's the point in this. How many houses do I have to sell to make what I want to make? I have to sell 139. Does anybody have a higher number than they're selling right now? Please have a higher number than you're selling. Thank you. I hope it makes you want to pee in your pants.
I thought you meant if we receiving a higher number. Oh.
Yeah. I want this number to be a higher number.
It is.
Yeah, we want it to be. Otherwise, you're not shooting high enough, guys. Like, this should make you a little scared. This activity is not supposed to make you comfortable. Now we know, okay, I need to sell 139 homes in the next year. This is what I'm gonna spend to do it. Okay, so when you're spending money, now you know, is it in this range? And we're gonna break that down a little bit too, so you know what goes in each range. The cost of sales is gonna be straight up. We're not gonna break that down. You know what it is, it's 36%. That's, so you have. The operating expenses is where you have the variation. So we can make more profit if we don't spend that much money, but if we don't spend enough money, we don't get the business either. So that's the thing, that's the mistake that agents make, and agents that are growing really make that mistake. Yes,
So I have a question. Which one of those are you taking, like your, payroll out of? The anticipated or the operating?
we're gonna, okay, so your salary comes out of operating expenses. Yeah. So, and we'll go through that in charts. So your financial team should look like this. If you don't have somebody that is included in this list, you need to have one. Ask somebody in this room for a referral. You should have an individual person for everybody on this list. Somebody to consult, somebody to ask a question to, somebody to help you with. You have Ben as a coach. You can have your own private coach, but this is what you need to have.
So if you take the number of houses that you have, the home sales,
Mm-hmm.
and multiply it by your average sales price, that's how much you need to bring in a year.
If you take,
How many, that's not what I'm gonna say, that's what your home volume sales will be.
I'm sorry, I'm gonna write it out.
Well, I said it backwards.
I do it better writing it out, so my brain is
Hey,
very
Shannon?
visual, yes.
While you're doing that, can you go back a slide to
Yep.
that list and, so I can write that down and not waste your time later?
I will do it.
A good insurance agent.
I do.
The
My
resource
nephew
list
and his
in here.
dad.
Okay, so tell me again, tell me what you're trying to solve. for. What is the answer you want?
Volume,
Okay, so you wanna know how many houses you need to sell?
no,
Okay,
home sales volume, like I have to sell 10 million. this
okay,
year to
so
get-
you wanna say sales volume.
Yeah.
Sorry.
That's okay, no, it's, I keep opening the same one over and over because my brain can't remember which one's not working. Okay, so you want to know how to get to sales volume,
I'm pretty sure it's just
okay?
the home sales amount that you have to have.
Do you know what you want your sales volume to be?
Oh, it's a very different. From thought versus what this is saying.
Okay,
So on a couple slides ago, when you were saying like what, 175,
Under 39 or something, yeah.
139, so you would just times that by what your average home sale price is.
For your,
and-
for your total sales volume.
Yes,
Yeah, but total sales volume is different than gross commission, right? So that's what we were looking at on that.
yes,
So that's what we were looking at there. We were looking at gross commission. The total sales volume is different. Total sales volume is like, I sold 100 houses that were $200,000 each. That's my total sales volume.
get you 2 years.
It can, we can get there. We can say sales volume. Let's say we had a sales volume of $10 million. I'm gonna have to do the math because I'm really slow on this. And my average commission is
200. That's just what our average is.
Let-
The average commission is 200.
no, let's say your average commission is 10,000.
$200,000 is what my average commission is.
On every home sale?
Are you jealous?
What
A lot.
are you selling?
So your average commission is there, so you need to sell 100 homes.
Okay, yeah,
Okay, right? So that's how many homes you need to sell. So take whatever you want divided by what your average commission is, that's how many homes you need to sell. Okay? In simplest forms. Now, just because I want to make sure we're clear, this is your total sales volume. If I want my gross commission, it's different.
yeah.
So in this case.
Well, wait a minute.
It's average.
How are you
commission.
getting sales volume by dividing it by your commission? Aren't you getting? You should divide it by the.
Oh, yeah. it's
such
just
the
not-
Price of the
Price of
house.
the house.
2 minutes, right?
That's why I said 200.
Sales
That's
price,
like 100 homes.
sales price. Sorry.
Or like the most confusing. for me.
I can see that. I'm like, sorry, this is why I had to write it out when you're asking me. I'm like, something is not right, what you're saying, when you're saying that to me. My head is not straightening this out. Yes,
Okay, so it'd be like 200,000. Would be an average sale price.
Something
Yeah.
50 houses.
50 houses.
Which
Mine
is a
has
whole lot
always
better than
been-
100. Like that? This
The
is not making any
brokerage that I was
sense.
at before this, they went by like. Instead of how many houses you have to sell, like that 100 number, the 50 number.
Right.
They always went by, this is the sales volume you have to hit. So my brain was just
Yeah,
trying to figure out how to get to that number, 'cause that's what I was taught there.
there's not a wrong way. There's like, it's not, it's, everybody's
yeah.
gonna look for a certain target, and we do talk about sales volume probably more predominantly throughout the business. So that's pretty natural. And we award based off the sales volume too, right? Like when we have our award things, we award off the sales volume. It's just another calculation. It's just the way you calculate it and how you tell your story. Everybody's got it. You need to have, do you have a business checking, business savings, business credit card, tax savings, personal checking, personal savings, personal credit card, and investment savings? If not, we need to talk about whether or not you need to set them up, because you should probably have every single one of these accounts. That's a lot of accounts. Right? But that's where you need to be putting your deposits in. Keep it organized. We talked a little bit about business entities, and let's go through what really Keller Williams wants you to know about each entity. And you guys are very informed compared to a lot of groups. So it is hot in here. My goodness.
Trying to be turning up more.
No, you're good. I mean,
Yes, yes.
Okay, I thought it was just me because I was standing up here.
No.
It is hot. So sole proprietors, what is the big difference in a sole proprietor versus a partnership LLC? corporation?
One person,
One person,
sole proprietorship,
right?
and the others are kind of unlimited.
And so the biggest difference in any of that is the risk involved. If you're a sole proprietorship, you're 100% at risk for everything. What is an LLC?
Limited liability.
Right. So your liability is limited to the amount you have put in to the business. So if somebody comes after you, they can only come after you for the amount you put into the business, the amount you funded the business. That is the big difference. That's the limit of the liability. All right, tax dates. Let's talk about that. So tax dates are interesting for everybody, and not everybody knows them. So these are dates to put on your calendar. So if you are paying any tax liability, if you are great and you zero out every year, fine. If you aren't great and you don't zero out every year, you will either pay a penalty at the end of the year when you file your taxes, or you will pay estimated taxes due and not pay a penalty. Your choice. It's a pretty good sized penalty.
It was pretty ugly.
Yeah, it's usually pretty ugly.
That was sad.
So
So, no,
these dates are very important, and that's what they're there for. Does anybody have questions about paying estimated taxes, how they work, what you need to do, any of that?
But filing is March 15th.
Yeah, so these are estimated tax due dates, not your tax return due date, right? So, yeah, so that's only for paying estimated taxes. So we don't really file them so much as we just go to the bank and take a deposit usually, send it in.
So we do ours automatically through QuickBooks.
Yeah.
Is there something more that we should be paying out that other than the state and federal, like the?
No, not usually.
Okay.
If you're doing it through QuickBooks and you're just doing it electronically,
Yeah.
estimated taxes are like kind of just very simple, just make the payments on, but it's fine. You're fine on that. It shouldn't be any more complicated.
so you can do it directly.
You can go on, you can go on
Yes.
IRS website.
Yeah.
That's how I did it.
Oh, really?
I don't even write the check.
You don't do the, you don't do the envelope thing?
Oh.
We do our payroll and everything through QuickBooks.
I don't do QuickBooks, but I just go to IRS website and state, you can do Kentucky State the same way.
I do it all through QuickBooks.
The only thing I have to pay separate is City of Paducah.
That's what I was gonna say. I can't pay my city of Cincinnati through
My
QuickBooks. That's the only
CPA
one I
takes
have.
care of
I let my
it.
CPA do it and I just mark it on my register.
Now, who are- Why are you paying this?
Payroll tax, city payroll
Payroll,
tax.
payroll.
Yes, I
I
think
think
so.
it's not-
Paducah City and
Yeah, it is
Mine's
monthly.
changed.
we do the, it's once a year for them.
Now, McCracken, we only do once a year, but City of Paducah for payroll tax, we do quarterly.
Oh, for
Payroll tax.
Oh,
Yeah.
okay.
Payroll tax.
Yeah,
is a
that's
whole
different.
nother
Yeah,
ballgame. That's
yeah,
right.
yeah, that's different.
Okay, so looking at deductions and exemptions, let's talk about which ones of these are personal, business, or both. What are accountant fees? Personal, business, or both? So these are the things, can you take them as a write-off? Here's how I would answer these. If you can take it as a business write-off, just say business. Like, if it's really clearly both, it's both. But if you're gonna take it as a business, it's business. And in this case, they're gonna say business. I'm just gonna show you the whole thing. Automobile and gas can be both. Your business cards, business. Cell phone can be both. Clothing. I find people who write off clothing all the time. It's personal, this chart is not really very clear. You can write off clothing if it is branded.
Right,
That's right.
right.
So get it logoed. When things are logoed, they're 100% tax deduction.
And why is that under personal then?
I don't know. Just the way they are, it's just regular clothing.
Okay.
Right. It's just a generality. That's why I said, like, if it's business, think about business. I'm gonna tell you the difference. Computer, both. Groceries, personal. Who even thinks that might not be? Health insurance can be both, right? So you need to talk to your tax advisor if you're not running your health insurance through your business. Talk to them and see if there's an option. Obviously, home mortgage and rent is personal, although you can deduct. Your home office can be both. Home utilities can be both. Meals can be both. We talked about how to do those. Professional organization, they have this business, and I'm gonna tell you, is it usual and customary? So don't get crazy with that. It's a flag for an audit. So if it's, is it usual and customary that that professional organization, like, let's say we want to write off our gym membership because we meet people at the gym. Is that usual and customary as a business write-off? No.
I know a lot of people that run off doing golf.
A lot of people write off golf memberships. You better have a real clear trail of what business you got from that golf account. Can you do it? I think you probably could do it, but you better have gotten some business from there too, or shown
I swear. it
some
was
sort
me.
of, yeah. I probably did it at one point. So I get it. Membership to the gym, movies in movie theater. We're up here, guys. It's gotten off.
Oh, okay.
I'm sorry. I want to make sure that you, yeah.
Yeah.
Yeah. So I saw that too. I'm like, no. Family reunion, that is a writable vacation. Take your family,
go and think about what to do on that vacation, however, or not. And website fees definitely are.
So you got me on groceries.
Yeah,
Is it for like,
confused about.
is it like for an event?
I don't know, it's just personal, those are personal deductions, I don't know why they put groceries on there.
Like an event. with
These
the
are just
logo.
saying, the one, are you saying the things that are under personal?
Are not
Are
tax
not
deductible,
exempt.
they're
Oh,
not
okay.
acceptable
Okay.
deductions.
Like, we're saying.
These are not
Okay.
acceptable
Yes.
deductions for
that I
your
buy.
business.
That
Correct.
makes more sense.
So, question like on the automobile gas insurance,
Mhm.
is there a percentage that is that like commonly used for like?
Is it over 6,000 pounds or not?
So here's what I'll tell you.
Yeah, buddy.
Automobiles and gas are really funny, and you have to choose what to do. And it's gonna depend on your LLC, your S
So
corp.
we use
So
our mileage, so we don't use our gas.
if you use mileage, you may not use anything else. Okay,
I
if
just
you don't
question
use
like the
mileage, you can
insurance
use
part.
everything else. So that's where at the end of the year, when people say, oh, I'm gonna buy a new car and write it all off, you can't if you're doing mileage. If you're not doing mileage, you can, and you can deduct it all. So but it's either or, and you can't switch halfway through the
But
year.
they should, that's been like the insure the vehicle, for that be under,
The what, the insurance,
Yes.
so that's included in your mileage.
yeah.
That's all included. It's all inclusive. You don't get to write anything else off. Yep. Mileage is mileage, nothing else. But if you don't do mileage, you do everything else. And so the distinguishment there is typically what kind of car do you drive? How many miles do you drive? If you're driving a very expensive vehicle that requires very expensive care and premium gas, maybe you do, right? Like, and you're running a team, so you're not on the road all the time because you have buyer's agents going out there. Maybe you actually work on actual expenses versus an agent who's beating the streets and a lower value car, take your mileage all day long.
You have a nice vehicle out there, don't you?
I don't, but here's what I did have. I did have a really nice vehicle last year and I did it backwards. I didn't do them because I changed it through the year. So I did, and I learned that lesson. Yeah.
Oh, you did it.
I didn't do it. I took the mileage, and so I couldn't take the deduction. So I ended up selling it in November, and I bought a new car, and I just wrote the whole car off. So now the beautiful thing is, it's like I don't really have to worry about it.
But it has to be 6,000 pounds.
That's for a special deduction that you can take. If you buy a vehicle, it's, well, I don't know if it's 6,000. I thought it was.
It's for your deduction, isn't it?
You can take any
For your
vehicle.
depreciation.
Well, but there's a special condition for those vehicles you're talking about, where you can write off the entire amount in that 1 year. Right, and you have to keep that vehicle for 5 years.
Yes.
Yeah, those are special
Yeah.
cases. You can write it all off, it just depending on how you do it. So that's a special case limitation. I'm not super informed on it. I know it exists, but it hasn't affected me. Really worry about it too much.
You can't you write off? Like, if you have two cars, you got a personal car, you can pay in
mhm.
bonds, and you can take one car and write everything off of the video.
Only if you use it 100% for business.
Right.
Yeah, and you have to have.
A
the-
personal car.
Here's the thing, even me writing off my vehicle out there, one, I can't get a mileage deduction or any deduction the next year. That's gonna hit my taxes this year. I have to be prepared for that, right? Because I wrote it all off last year to save myself taxes. So I can't then go ahead and say, oh, but I drove 10,000 miles. No, because I got it all in advance last year. So I can't do that. So also, if you're writing off portions of your car and like straight up deduction, you have to know what percentage you use it for. So if you're using it for any personal use, you have to know. That's why you keep your mileage receipts and stuff like that. And that's why you want the beginning odometer reading and the end odometer reading. So January 1st, write down your odometer reading. That way at December 31st, you write down your odometer reading and you've now tracked all your mileage. You know what the percentage is for personal business. It's easy to calculate.
I found out also going from your house to the office is not.
It's not deductible. That's right. Going from your house to your office is not typically.
Should be in the car.
No matter how many feet it is between the bedroom.
Yeah. Now, going from your house to say a regional meeting would be, going from your house to say another in the office or something would be. That could be. So if it's not your usual customary drive. that
I
would
don't
be-
intend to follow the rules. I found out what-
Yeah, I mean, like,
Well, unless you use your home office.
right? Yeah, then that's your home office, right? Okay, so we've kind of gone through some of those things. Everybody doing okay? Need a break?
Steve, you okay?
Yeah, let's keep going.
Okay, so profit and loss, assets, liabilities, and equity. We hear about this term a lot. What I really, and we'll talk about what these are, but what I really want you to hear is profit and loss, P&L, P&L, P&L. I want you to hear that because that's what we talk about all the time, and that's what I want you to do every month. I want you to run a P&L. I want you to run your business the way that we have set Keller Williams up to run a market. At the end of every month, we close the books, and by the third of every month, we have reconciled the books. If you can get into that habit, your taxes and everything are gonna be so much better. And you're gonna know where your spend is, when you're gonna know when to hit green and hit go for your expenses and when to pull back. And that's really the reason I want you to run a P&L. It's because right now we're shifting so quickly, like what's going on. Last month, new housing starts went down. I read this morning, this month, new housing starts went up. I mean, we don't know what's happening in this market, right? So do you spend, do you pull back? It all depends on whether or not you're on track with your P&L. But if you aren't running your P&L every month, you have no idea. And you're just blindly spending. Assets, liabilities, and equities. And we have income, expense, and profit. So on a P&L, we have your income, we have your expenses, we have your profit. This is what we talked about, your cost of sales and your operating expenses. They go on your P&L. Okay. We also have what we call a balance sheet in any business, which is your assets, your vehicles, your equipment that you've purchased, your liabilities, what you owe, any bills you owe, and then whatever's left over is your equity. That's your owner's equity. So whatever's left over for you to build future business on, save, do whatever it is you want to do. That's what you have.
So what assets are you tracking in this industry? And how are you?
I track anything over $500 in purchase volume. So an individual item. So computers, cell phones, you can track all of those and just keep an inventory of them or when you purchase them. Now, some people will do it at a higher volume, higher spend limit. I try to do it with that, but I don't spend that much. I'm pretty cheap. So those are unusual purchases for me.
So signs and things like staging items.
I mean, if it was a couch, like if it was a couch, it's certainly an asset. Yeah. Furniture, yes. But like a sign for the yard, like all your signs, we $1,000. Right. I mean, I probably wouldn't track them as an asset. I don't really think of them getting stolen or damaged in mass volume. So that's the kind of thing, like you track your assets to kind of write off for depreciation. If you were like Mark saying, those listings and you had probably 20,000 lines, that's $7 million asset. But what, are you gonna lose them all at once? No, because they're in 20,000 yards. So like I probably wouldn't think about that in terms of the whole entire asset volume. Those things that are individual in volume, $500 in what I would track. This is what your P&L should look like. Okay, you guys have this in your book as a format. I can send it to you in an Excel format too. Okay, so if anybody's not using it, I can send it to you in Excel. If you're using QuickBooks, you can also set it up. Okay, so with the same thing, my QuickBooks is set up exactly this way. It's really easy to change, but
Saying that you only have those categories in your picture.
I'm not saying that you can't have others. I'm not saying you can't have others. These are just kind of the general standards for best practices. You can absolutely have others if there's other operating expenses that you
You download that MREA chart account.
Yeah. You absolutely can have some others. This is a simplified so they could get it on one slide sheet, right? Okay, mass class, simplified sheet. That's why I want you to know where to go get your asset, your resources to get the big one. Yeah, there's just, every team, every individual is going to be different. This is very simplified. You can get most things here and then add a miscellaneous category. And that's completely fine for taxes, y'all. That is completely fine for taxes. Because what really you're writing off, your accountant's not going in here and writing off the individual line items most of the time on your taxes. Writing in one bulk sum of the total of all those numbers.
Occupancy is
Yeah.
what, rent?
Yep, that's your rent. Yep. So these are best practice amounts that you should be using. So if you're paying yourself a salary and you don't know what salary to pay yourself every month, 15.5% of whatever you make is what you pay yourself. Lead
So-
generation, 9.6%. If you're not spending 9.6%, I will come back. If you're not spending 9.6%, let's say you're spending 5%. Is that good or bad? It's probably not healthy. If you give me this and you give me your numbers and it's at 5%. And you say, I'm not making enough money this year, I'm not selling enough houses. We'll be like, well, your lead generation is only at 5%. Put some effort into it, some skin in the game, right? You're not gonna get the sales you want if you're not doing it. So in the beginning, your numbers fluctuate, but maybe it's time to put a little bit, a party together, an event together, a newsletter.
I was gonna say, that doesn't mean you're paying that much on online
No.
leads. That means that could
Lead
be your client
generation.
events. You're
Absolutely.
nurturing your database.
It could be buying leads. It could also be, I wouldn't recommend it. I think that's a terrible use of your money. But, but some people have built businesses off of it and I'm not gonna shame them for it because it works for them. I don't care. But what I want you to know is the percentage is where you should end up. So, absolutely. Can you take some percent, a little bit from here and there? You can, but this is a best practice issue. We'll see a change in your business if it doesn't run balanced and healthy. So,
This
consider
this is very valuable.
you're very
Thank you.
valuable. You're welcome. That's why I want you to know I'll give it to you in spreadsheets and with more breakdowns too. I'll be sending you follow-up documents. Okay, so you'll be getting more from me. Friday, not tomorrow, Friday, because I'm teaching this again tomorrow. So any questions on that? I
So
want you to
this
track
one
this
here,
every month. I'm sorry, go ahead.
You're tracking your automobile expenses and insurance. Even if you're not writing, even if you're writing off. Mileage. So you have to back that out on your P and L or what?
You have to track it. So it might just be your insurance. Now, if you're submitting mileage, that's an expense to yourself, your mileage expense. So you're gonna track that for your business.
So you're tracking gas and tires and oil and all this.
No.
maintenance and-
No, if it depends on how you're writing it off. If it auto can be mileage. So that might just be mileage. For me, it's gas and all that. Because I remember I wrote off my whole car. So now when you write off your whole car, you can do the gas and all of the insurance and all of that kind of stuff. If you're doing mileage, you're not gonna do that. This is just gonna be mileage.
How do you put mileage on your P and L? Or you take the mileage and then what?
It's 50 cents a mile or something.
You take,
The national average.
you pay the per mile and then you deduct it. from the
Mhm.
thing.
Yes, you pay it out. That's right. Yes.
You got a LLC, you're supposed to pay yourself for mileage.
Yeah, you technically should be reimbursing yourself for mileage every month.
Oh, you should.
Yeah.
Really?
Every month. Oh,
Well,
if you do the mileage versus.
that's right. So I'm assuming when I give you this, that somebody is turning in, even if it's you to yourself, a mileage report monthly to get reimbursed for mileage. Okay? And then your company writes you a check to pay for the mileage. It depends on how the car is owned and all of those kind of things. If you're writing your mileage off of your personal taxes, then you can't deduct it off of your insurance, your business taxes too. You get to choose where to take it. But if you are paying yourself from the business, then you are going to deduct it here. Who owns your vehicle? Do you own the vehicle or does does your company own your vehicle?
Now they're owned by our trust.
Which is personal or business? Okay, so then your company should be paying you mileage. And the company gets to deduct that.
I didn't know that. The last car we had was owned by the LLC.
Yeah.
With the insurance on the car on my LLC. So
Yeah, and then that's different. So then the business would just write off the mileage every year. But it still needs to come on your P&L report as a real hit because you're still incurring the expense. So, yeah. Anybody else have questions on that?
We should have done this in December.
We're gonna do it again, don't worry.
That's what I was
So
thinking.
I'm teaching this again in September for the whole region. So The reason I'm doing it individually now is because it's so overwhelming, like it is just and that's a 4-hour class, we're going through the nitty gritty details of it, so.
Where is it?
It's gonna be on Zoom. We're doing it on Zoom, yep, for the whole region, so, it'll be coming, so. Yep. All right. So this is walking you through what a sample P&L statement would look like. These are all in your books too, by the way, so just so you know, your handbooks are in there too. And you can see they got, this is somebody who's doing residential and commercial income, their total GCI, this is the format. Remember, I have a spreadsheet if you want it. Total commissions paid out, other cost of sales, why would commissions be paid out? Team referral fees that are paid out after the brokerage has paid them out, those kind of things. Total salary, total lead generation, total education, total occupancy. This should be done every month. Every month. Because you need to know where you fall and where your business falls and to know if you need to spend more and don't spend less. If you're hitting all of the things that you need to hit and your lead generation spend is low, good for you. Right? Good for you, but it's probably gonna hit you 60 to 90 days. So that makes you aware of it and makes you watch it. And then you go, okay. Or supplies and office. Like there's other things on here too. Like you might, what we don't have on here, what we don't have events on here, right? To entertain our clients. Maybe it's time to throw an event. That can be under your lead generation.
Oh,
Like,
that's what I was gonna say.
yeah,
Is that not?
it can be under your lead gen. Yeah, absolutely. But just you're gonna think about where you need to spend it. If your total salaries and benefits are too high, you better look at your office team, right? And think about, do we need to move somebody around, put them on commission, change the structure? Maybe they're not paying for themselves the others.
So this is the accurate one you keep for yourself and you keep a separate one to give to the IRS.
This is not recorded.
You're gonna get kicked out, Steve.
No, I won't kick him out. I just laugh. I've seen it all done. I've kind of thought about doing it myself a few times. My accountant's like, I don't want to answer that question. Then I know I can do it. No, just not tell. This is the more broken out version that you'll see on the MREA reports. So you'll see they do break it out into very, very good detail. So this is all in your book. All of the different things that would be included in each section. Okay.
Okay,
So-
hang on.
Yep.
We have that page?
Yeah, it's on page 50.
Okay, thank you. Okay, so that was, I'm sorry, this is how you break out each section of what we just looked at.
Yep.
Okay.
These are
gotcha.
just the options. These are the options as to they're giving you, you don't have to have it something and everything, but it's giving you like, because you might ask later, like, oh gosh, I had that, where do I put it? Okay, now that's right. So it's just kind of giving you shit from studying. All right. Let's look at your business budget. For each account, you can have sub-accounts for anything that you want to track. And so that's what you were seeing there. Lead generation, advertising, print, internet lead generation, entertainment, other lead generation. We covered a lot of these. We covered playing red light, green light, and sticking to your budget. So told you I would go around. So your agent trend report. How many of you have seen it? Has anybody seen it? I think everybody said they have not seen it. No. Yeah. Agent,
A couple of them have, yeah.
Ben says you have seen it. Shake your head, yes.
A couple of them.
Been at a team meeting, we might want to go through this again.
You've seen it, we just don't.
Yeah, I know, and we don't, but let's look at this, and I know it's really, really, really small. Can you, is this in your book? Did they share this with you?
I don't know if everybody knows how to play.
Okay, it is on page 73, slide, or
You go into
page
report.
77, so page
Okay.
73 at the top.
Okay, so if I'm looking at this,
Same one.
and I'm looking at this for, anyway, we've got appointments, closed units, closed sales volume, listings taken. And they're not tracking their appointments. Okay, got it. I'm looking at this for the past couple of years and I see somebody's closing one. This is somebody who typically closes multiple transactions a year, right? But in September, they didn't close anything here. They didn't close anything here. They closed one here and one here. What do you think 2018 is gonna look like for them in September?
Yeah.
Yeah, so does it change? Because in July they did 5. By looking at this, does it change the way you think about how you should be running your business?
I'm thinking maybe they go on vacation in August and that's their,
Or
their,
July.
you know.
Yeah.
I think it's, you know what I think? I think their kids start school in August. And they stop all lead generation to get their kids in school. And then they come back like, and they're like, oh, I'm free for 2 weeks. And then in September they come back, they have a slow month and you see it start picking up in October.
That's a valid guess.
I mean, it's pretty typical of a lot of people. So a lot of people. And so, but if I look at this and I see the whole, it makes a difference, right? And you can do the same thing in looking at listings taken. If you want to be a higher listing agent, look at the months that you're doing listings. You're looking at listings taken and you say, I want to do more listings, but that's what everybody says they want to do, right? Everybody loves working, having more listings. Well, in June, she's selling 3, 6. This is her biggest listing month right here. Yeah, using her, but it could be him. So I would want to know, what are you doing in March and April? Like, what are you doing there? I would look for holes, I would change up business, but I would certainly be concerned about May this year because there's absolutely nothing there. So probably similarly, spring break. I can usually pull, and any agent who has kids, you can almost always highlight around where the activity is.
They had
And-
13 in March.
Yeah, 13. We'd like to know what they did different.
Yeah.
They probably did
Awesome.
something.
It probably came out of. it's
Had a
small
few of
business.
them.
So please pull your report and look at it. And if you have questions on it, send it to me, send it to Ben. We'll look at it and give you ideas as to what you can do.
And that's in my case, I do.
It's in my KW. And what I would just do is I would look at it and say, okay, look, my kids are going to school. Are my kids going to school next year in August? Yes, probably. So what am I gonna do differently? I'm gonna go ahead and have something automated done for me. I'm gonna make sure that in June and July, all of my drip campaigns are going. I'm gonna make sure that a newsletter goes out in July. I'm gonna make sure I send postcards out in July. I can order all of those things ahead of time and I can still take my time off in August. So, I mean, it can truly change your business.
Next year the kids will start.
I'm still on, no, I'm on Central Time. Okay, so we have 20 minutes left, right? I'm reading that right? I'm terrible at time zones. If y'all have ever listened, I have a podcast with Linda because if we talk about it on there, I'm terrible at time zones. I schedule wrong. I had to have an assistant just to schedule my appointments because I can't figure out Central and Eastern time zone. And I finally was just like, I'm just stupid. So that's why I'm asking. But my watch is right. So other things we want you to think about. I want you to think about financial health, but also spiritual health, physical health, personal life, key relationships, jobs, and business health. For me, the biggest thing is disaster can strike. Are you paying attention to all of these categories? And if you're not, we just want to draw attention to thinking about. Now's a great time. You know, we're halfway through the year. You've got a year here. If something's not going right for you, this is the time to make the change. Restart. If you didn't have a budget at the beginning of the year, if you didn't know how to do any of this, nobody says that a year has to go January 1st to December 31st. Many businesses work off of a June 1st to May 31st calendar. This is your fresh start. So get it right because all of the other things are all affected by it. Because I know that all of my health categories suck when I don't have a financial piece in place. I can tell you that after I came out of that situation in 2007 and 2008, all of this was a complete mess. And so now I know that when I have this, I'm not stressed, I'm a nice wife, I'm a better mom, I am better all around. So that's really, it's just to call your attention. I like this quote. When I was young, I used to think that money was the most important thing in life, and now that I'm older, I know it is. Consider what your savings are, your profit share. Y'all, profit share is one of the biggest ways you can change your business. So I will tell you that it can change your business. You can, that 30% cost of sales is wiped away with profit share. It comes right into your cost of sales, wipe it away, the entire 30%. By building a downline. If you haven't done that, truly, like, it's a great time. Agents are switching offices right now, all the time. this is a great time to tell them what you can offer them. So I encourage you to do that. If I can help you do that, I'm happy to help you. Profit share has changed my world. As a team leader, I was able to recruit and grow and get to know agents. I'm telling you, it's a game changer when you get it. And I didn't even believe it was real when I first heard it. All right. Gone through all of this. The last thing I'm going to ask you all to do, I'm going to stick around too. I'm not in any hurry. So if we want to go back through anything, answer any questions, I am here, not going anywhere. But so I want you to know that. One of my goals has been, and I'm big on your goals, so I want to encourage you, if any of you guys want to train or teach or take a different role, or hear about different roles, I'm here to help you because I have been an individual agent, I have been a team agent, I was a team leader for 3 different offices. I have been the regional technology director. I am an owner of Cyber Records for the region. And I get to teach. So I've experienced so much of what is offered here that if you have any desires for any type of different career or contributing to anything else, please talk to me. I will tell you the path to go down it and I will connect you with anybody that I can to help you. And so that brings me to this. I have to do evaluations because I am up for becoming KWU certified and bringing career visioning to our region. And so I'm working on that. It's a very hard thing to get the box checked for. We have to have 75 evaluations, which, believe it or not, seems really small when I teach every day, but it takes an entire year to get 75. So I am within 20. So I would love it if you guys would help me get there. A 5 is good, a 1 is bad. People sometimes put she was awesome, but give me a 1. I'm like, well, that's tough. And I have to have a 4 or a 5, or it doesn't count. And so if it's not a 4 or 5, that's totally fine. I get it, but I want you to know because I know that the scaling system is very confusing.
Just
So,
making sure I'm on it now,
Yeah.
profitability agent financials. is that what
yeah,
we're-
yeah, profitability agent financials, and then you go down to no
That's what I couldn't
instructor.
find.
And I picked up on
Yeah, that's right. Go all the way down to the bottom. It say no instructor listed. If I get these 75, my name will actually be listed and everybody's life will be easier.
yeah.
Yes, and then you just type it in, Shannon Dager, and I appreciate it. That would be very super, super, super helpful. I know this is a quick class. We will go back through it.
Ohio Valley, right?
Yep, Ohio Valley region. So, I'm gonna put my name and number on here again since we erased it.
So we gotta select course, not every office.
No, the course is it's profitability agent financials. They named it funny. Profitability agent financials. And then name is not in drop down.
Okay.
If you need any resources from me, I'm gonna send them to you on Friday with a note and reminders. If you need anything that's not on there, whether it be related to this class or another class, I guarantee you I have it in my Google Drive. Please just tell me, I will send it to you. Don't go to the work of making something and telling some other agent has already sent it. And I will be happy to share it with you. So anything at all, like from a listing presentation to buyer's contracts, I'll send it. I've been a team leader, so I have all that stuff and I'm happy to share with you anything that you have. Just reach out, I'll put my email on here too. And I do have a podcast with Linda McKissick. If anybody's thinking about growing a team, it's called the Leverage Ladies Podcast. So we
listen
talk
to
about
that every week.
Thank you. Yes. We have some good ones coming out. There's a really good one coming out this Friday, with Ryan Allen, who is like a huge operations guru within KW, and she talks about operations. Like if you like knowing about how to run your business and the team, it'll release Friday morning. It's going to be great. And then we have a couple of book authors. The 10X book author just came on.
That Linda talks about all the time.
All the time.
Yeah.
One of them came on and we talked to her this week. She was amazing. And then another book author about building a team. We just did a podcast with him as well, and he has a book. We're going to give those away at the Mega Agent. Are y'all going to any of y'all going to the Mega Agent night? Yeah, that'd be fun. I'll see you there. That'll be fun. We'll give those away.
Profitability, yeah.
Yes. All right, so here's my email. I try to keep it simple. My phone number. I'm pretty responsive to anything if you text me or email me. Just let me know what you need, how I can help you. And like I said, I'm sticking around, so I'm not in a hurry to get out the door. So any questions, I am happy to help and we can go back through.
Yeah, thank you.
Thank you. I know it's a lot, so thank you guys for going through it. Good.
That's the advantage of